inflation. These inflation supply shock numbers will not get the Fed to surprise the market. And the data is out, the May jobs report, 172,000. Is there any doubt that this anecdotal evidence about a good labor market has been very correct? That is a really strong number. And last month, well, we had a revision from 115,000 to 179,000, which means the 2-month revision has got to be over 90,000. That is a good number. Even manufacturing posted a 7,000 job gain. So how strong is 172,000? That would be the best number since 185,000 in March. These are solid numbers. If we look at what's going on with average hourly earnings come in at 0.3 as expected. If we look at average hourly earnings year over year, 3.4 as expected. And I would like to point out that on the month over month, 0.3 is a tenth higher than the 0.2 in the rearview mirror. But the 3.4 year over year is 0.2 light. 0.2 light. 3.4 would equal where we were in March. We started the year at 3.7. Okay. Now, if we look at the work week, and the work week, of course, has been getting a bit smaller. The average work week's coming in at 34.3 as expected. The unemployment rate, drum roll, please, 4.3. Well, we didn't really need the drum roll. That is a very, very nice, historically low rate, and it's pretty steady there. As a matter of fact, we're at 4.3 every month this year, except for February, we're at 4.4. Labor force participation rate, it's been moving lower. You know, last month it moved to 61.8. That was the smallest since September of 21. And that's where it's camping out at 61.8. And that's really depressing. You know, you read these statistics about how many able-bodied workers are not working or looking for work. That is something we need to deal with. And finally, the last part of this number is the underemployment rate. We call it U6. The actual employment rate's called U3. U6 comes in at 8.1%. 8.1%, how does that compare? Well, it was 8.2 last look. It was 8% before that. The low water mark was 7.9%, and that was in February. What has the market done? Exactly what you would expect. Interest rates are going up, and not for a bad reason, for a good reason. A good reason, because the economy is doing much better from the view of labor than many had expected. So before the number of 10-year was around 447. Right now it's hovering at 453. A 2-year was at 404. It's now at 411. And the pre-opening equities, the Dow futures, they're now down just a bit. They were up 20. Now they're down about 20. Why? Well, interest rates may be spooking it a little bit. But in the end, not all higher rates are necessarily a bad thing. Back to you.
Rick, yeah, initially it's like, oh, boy, we're not going to get our cuts. People talk about hikes. Maybe that's what is in it. But you know what? The market has been, the S&P's been up 10 straight weeks. The markets knew that the economy was doing well already. So if it doesn't go up today, it's not because it's a bad number or anything else. I celebrate this, and the market should be going up.
Oh, absolutely.
You're right.
The market already knew. The market priced in a solid economy. You're absolutely right.
10 weeks ago, we're wondering what the hell. It keeps going up.
Against most of the experts, by the way.
Right. That's what I mean. But in the back of everyone's mind,
on the right side of this racehorse. That's right.
There's still people, traders and investors can't get it out of their head that they would like lower rates and a Fed cut or something. Maybe they'll get it based on something else down the road, but they can't get that out of their mind. But the markets why isn't it up today? It's not up because it's up 10 weeks in a row.
Yeah, but the market also probably celebrates either side of this. Either great economy continues or you get some relief in the
in a down market, it would be selling off on both sides of it. That's
right,
the way it works.
This is an up market, right?
Yeah.
That's right.
Right.
Hey, Rick, any other thoughts before we jump over to bring Steve in on the same thing?
Well, I'll tell you what, one of the things that I really am nervous about, and I underscored this, is labor force participation rate. These numbers need to reverse, and I know that many are going to talk about immigration, and I understand that. But I still say, What problem we have is that we overspend. We're a generous, benevolent society, but we need to get able-bodied workers to be looking for work or get back in the workforce. This is a big structural problem in the country, and it needs to be addressed. And Washington has to get their act together and quit running around and not doing anything. They should do their job instead of trying to micromanage families and social issues.
Well, Rick, post-pandemic, we heard about that the safety net was almost too lucrative for some people.
And that's exactly right.
Is it still like that?
People probably more not to work. Absolutely. If you look at all the generous programs, all of them, the problem is that you try to take back $1 of generosity during a crisis, you're not going to really get it back. How many arguments did you have about that whole extra money that we boosted on the healthcare side that we couldn't take back? It was supposed to have a sunset. Nothing sunsets. These guys in Washington and gals in Washington really need to look at this. Exactly.
To make sure we didn't take anything back.
What good does that do? Yes, yeah. Right. Then they hold hostage all the good notions that we need to accomplish.